Hello, everybody. Welcome to the TraderMerlin Show. No, I did not forget about you. I have literally been sitting here talking to you as like the markets are going like a normal show. I just forgot to hit the live stream button. So we get 6 minutes of recap out there. Oh, my goodness. Thank you for putting that one. Did Merlin forget about us? I absolutely did not forget about you. I just forgot to hit the record button. One of those days. Excellent. All right. Here I am. Sorry, everybody. My apologies. And I am not drinking whiskey today. It's funny. I saw the comment about whiskey, and I was like, no, that's tomorrow. All right. Let's start from the top. All right. Today was a very interesting day. As you guys know, my expectations were that bounce from yesterday would be a little bit extended. I think we would have gone through today. I actually thought that we would have seen it maybe going into Friday with this optimism and euphoria that everybody was going to be, excited because the Fed raised interest rates by 75 basis points. For me, that's actually bad news that they raised by 75 basis points, but I think the markets and the industry is like, oh, Jerome Powell and the Fed's on top of it. Yay, good for them. To me, it's Jerome Powell and the Fed going, oh my God, we have a problem. Houston, we have a problem. So I was hoping that we would have seen another couple of days of up moves. So on Monday, when some of my put options expire worthless, I can, or my puts and call options expire worthless, I can take that money and redeploy a lot of that capital into new short positions. Unfortunately, today, monster moves to the downside, so I was a little disappointed because I really want to be short right now in a very big way, but I actually thought we'd have a couple days of relief rallies, so bummer that didn't happen. So let me go back, and yes, the graphic. Love the graphic. I'm actually pretty happy with the way this one turned out. My little neck brace I have on there. Yes, that is photoshopped. I just took a picture here in my studio and decided to throw a neck brace on me. Yes, exactly, GD. As you know very well, the most vile, disgusting four-letter word you can use in trading is hope. That is a horrible word. So let's just say I was anticipating a rally on Thursday, a slight rally on Friday, and ultimately, on Monday when we open up, I could just load the boat with some puts and then capitalize on downside move, but apparently I missed that boat. Bummer. Let's talk about the markets. As I've already done, I was already on the S&P by the time I realized I hadn't hit record yet, so my bad. Here is what we have cooking for today. The real story, it's all a big story, but I think the real interesting piece right now is cryptocurrency. We will talk about cryptos to whatever extent you guys would like today. I, for one, am bullish. I'm sorry. Man, am I having a rough day or what? I am very bearish. I actually believe Bitcoin and the entire industry is going to keep going down. I think it's going to drift lower and lower and lower. Right now, you have a situation where it's pretty much like Enron and WorldCom, where a lot of companies have been saying things that are not quite true. They're not disclosing what they're doing, what they're holding, because they don't have to. Enron and WorldCom did. That's why we got, like Sarbanes-Oxley to give transparency to investors and just trusting the data. I think you have a shakeout coming, shakeout on our hands right now in crypto and much more downside movement here. So anybody who is, it's true, the article is Monday, call it Tuesday. I think we're seeing much more downside movement. So we can talk more about that as we progress. Here's Bitcoin on the day, though, down 3.82% as of right now. Again, I don't use the typical closes. I go by what the markets are doing as soon as I sit down to do this show. So I'm usually 1 hour late. Where's the safe trade? Stablecoins. I was stablecoins. You go to USDC, probably be the safest when I go to cash. Go to cash, go short the markets. I personally am not going to short crypto. I just don't have the cojones for that. That's just too crazy. All right, here's where the story gets really interesting. I'm going to bring up the Russell 2000 here, and let's start things off on a daily chart just to look at what happened. This picture, for the average person looking at this, goes, so what, no big deal. For me, it's really important. And the reason for that is, you notice that the lows we had back here on the 12th of May, right? That low for the Russell 2000 was 1,698. So we'll call it 1,700 just to be even. We had a nice little rally out of that. Did not make a new high, which tells me that downtrend is still intact. And then all of a sudden, a week ago, aggressive sell-off from 1920 all the way down to 1,700. And then we started that little bit of a bounce, right? That's the FOMC doing that 75 basis point raise. We had a nice rally yesterday. I'm like, okay, great. We might see a little bit of a move up here, a little double bottom formation. And today, it erased all those gains. Like all of yesterday's gains just completely evaporated and then some. And the challenge now is, I'll just move this line down for examples. If you look at the 1700 mark right here, we're below it and we closed below it. So this is really critical for me. Now I have to go and say, all right, well, where's my next targets here? So I'm just going to scroll over till I see a blue line show up on my screen. And there it is. That's the 1700. Your next level that you have anything that's potentially going to slow it down is right here around 1550. And that may not seem like very far. You're like, oh, well, it's only 100 points. Well, 100 points is, today we fell 76, and that was about a 4.43% decline. We drop another 100, that's going to be roughly 6%. So another 6% decline, we'll be at 1550 on the Russell 2000, and there really isn't anything that looks remotely like a demand zone between where we are right now and that next 1550. So my feeling is you're going to see a pretty quick move down to this 1550 level. If panic does persist, I really don't want a big sell-off day tomorrow because that means I missed the boat and I'm not short on it. But if we do get one, the question I had from a friend of mine was, are we going to get down to that 1550 mark? And I go, you know what? The odds are definitely slim, but at this moment in time, we have a lot of fear. There's a lot of panic out there, and I think that it certainly could happen. But if I have a standard deviation, a little bell curve, if you will, I think we got a pretty slim chance of being down, 6 or 7% tomorrow. But ultimately, over the next couple weeks, I think 1550 is a very high probability of hitting. I know, probably not what everybody wants to hear, but just what I'm seeing on the charts, guys. Next on our list, so Russell was down 4.43, and then we have the NASDAQ. So the NASDAQ today did a complete about face, as everything did. Another total engulfing, although not as brutal as the Russell. But what's noteworthy about this one is we came right down to 11,050 on it and turned. And if you look back here off to the left, that's right where we turned back in October and November of 2020. So kind of a perfect bounce point there for anybody who was thinking about a potential buy spot on the NASDAQ. The issue with this one, it's just ugly. I mean, you've got it just heading lower and lower and lower. The good news is we did come off the lows a little bit where the Russell did not. So still all in all a pretty bad picture, down 3.65%. For the NASDAQ. Now, even the S&P was not immune to any aggressive selling. I've had that 37.14 level on there, which is the low from 2 days ago. And, we knifed right through that one today. So these levels that I've got mapped out here, they're done. These ones, actually, that one will probably stay, but this level's gone. This level's gone. Same picture. We've closed below 3,700 and did so aggressively. So you scroll back and think of where we might be headed. Well, there are some demand zones over here, but I'll be honest, I feel like they're rather sloppy. None of these look really good. Going back all the way to October and early November, that might be the next stop, which would be 3,200. And that could be a pretty dramatic fall. Let's go 3,200 just to see what that might be. You notice I'm going off these kind of low points here from a percentage basis off this chart to where we are now. Let's measure that bad boy. That's looking at about another 13%. I know people think that can't happen, but you know what? If you think it cannot happen, it probably will. So, I still think there's a lot of downside movement here for the S&P. It's going to be very interesting going back and checking out our forecast. But you guys remember I was saying that it would not be far-fetched to see this market retrace this entire COVID rally from those COVID lows back in 2020. I said, it's a long shot, but I think we can get there, and it's just going to take some fear. It's going to take unwinding of the balance sheet. It's going to take economic data to filter through, and if we do get any sort of cyclicality, when I say cyclicality, what I mean is that what I call the downward spiral. That downward spiral is companies start to look to the future and go, crap, things are slowing down, so they do layoffs. When they do those layoffs, you start to see the unemployment numbers start to spike. When you see unemployment numbers start to spike, then you see consumer spending start to drop. So things like retail sales start to decline. That's funny. All three of those things have already started to happen. Then you add, and that again might be a saving grace for inflation. If people are laid off and they're not buying anything, we're going to see prices drop rather quickly with regards to inflation data because businesses are going to start to drop their prices if they're not selling stuff. Right now they've been raising prices because everyone's buying everything. If that cycle repeats and gets deeper, another round of layoffs and more layoffs, and then all of a sudden we find ourselves back down to those 2020 lows in a very short period of time. Could it get there by the end of the year? Yeah, it could. I don't think it will. It'd be way too panic mode sell-off, but it certainly could. Let's see, what do you say? Merlin, do you notice the S&P hit the ghost print? Oh, I did not. I actually deleted that ghost print. Damn it. I wish I didn't. It was so far out. Dang. You had it on. What was the GD? What was the number on that one? For those who don't know what we're talking about, I think this was actually back in January of this year. There were some really crazy prints coming through. What was it, Thinkorswim? I think that was a platform you were using. And we marked them on the chart. And there we go. Interesting. Maybe it was SPY. I think I actually still have it written out there. Oh, there it is. Here's the ghost print. So this is from January 24th. Holy shnikes. If that isn't weird, everybody, I don't know what is. So if you're not quite sure what we're looking at, I'll explain it. This is the S&P 500. And we marked off this. I think GD was letting us know. It was 36. I'll double click it. So you had 364.68. I wrote down 364.30. But either way, that print, this blue line here was put in on January 24th, which is right where my cursor is right now. So way, way out of the money. And here we are, 5-6 months later, and we hit it literally to the dot today. That is really, really interesting. Well, if we just had some leaps on that one, right, GD? Wow, that is pretty amazing. And which platform was that on? I can't remember. I think you were talking Thinkorswim, right? Think about it. No Fed intervention and tightening gone, and we could easily go to absolutely. And Richard, they can't intervene right now. That's the best. They can't. What can they do? Yeah, we talked about it on this program that they've backed themselves into a corner. Hey, it's unfortunate that a lot of people are going to get caught with this one and lose a ton of money. But if you're following the market, you get out, go to cash, or you start building some hedge positions, or just go outright short. To me, very, very interesting. Wow, I did not look at this one, but thanks for bringing that back up, GD. That's pretty cool. Literally today. Let's see, what's the dead low today? Dead low was 364.08, and my number was 364.30. Pretty awesome. That is cool. And I guess, what is it, coincidence that it hit it? Maybe. I don't know. That was a long time ago. All right, let's go back up this chart list. So I was on S&P. Again, it closed down below those levels, which is critical. You look at the Dow Jones Industrial Average, down 2.19%. It also is in that very same situation of breaking lows and basically seeking out a new floor. Okay, Thinkorswim. Yep, that's what I thought. And then it wasn't all negative. The good news for me is my silver did rather well today, which helped hedge a little bit of my portfolio. But crude oil was up 1.5%. Here's your daily on it. We talked about buying pullbacks into demand. Now, of course, today you had this giant long bottoming tail, almost finishing the day with kind of a little bit of a hammer formation. No problem, Maheen. Have a great day. Get a little hammer formation, and when you see a pattern like this, quite often that will mean a rip to the upside here. And personally, I think you got to be real careful with crude oil, given all the drama and back and forth between President Biden, the whole administration, and oil companies, and some of the stuff going on between ExxonMobil. Pretty funny. I think you got to be a little bit careful there with crude oil, but certainly I think that bodes for more bullish prices for crude oil. And then ultimately here's the risk-off event, which is a historical norm. You had gold today up pretty good, 2.2%. Now, granted, it's still not past some of these most recent highs, so I won't be throwing a party until we get above there, but personally, I do think we will get above these most recent highs, which is right around 1880, and then slowly start to drift up. And here's SLV, which has been much uglier than gold, but it looks like it's starting to gain a little bit of a footing. It's stabilizing. Just looking forward to getting above 2065, and we should do good. Let's see. Build back better before COVID. Well, it's funny, at the press conference, the FOMC press conference, everybody likes to point the finger. So anybody here who's a Democrat is going to throw the finger at Trump. Anybody who's a Trump fan is going to throw the finger at Biden. It's always that party, that party. I wish that they would just shut up. I saw Joe Biden on, what was it, Jimmy Kimmel, or whoever's sympathetic to the Democratic Party. I think it was Jimmy Kimmel. And, he spent a whole bunch of time going, well, Republicans this, Republicans that, Republicans this. Shut up. How about our country? I'm so tired of it's like, I hate you because you're Democrat. Oh, I hate you because you're Republican. Just shut up. Can we just say what's best for the country and just do that and say, I'm not going to address the Democrat or Republican in a press conference. I'm going to say, this is what my country wants. This is what I'm doing. I don't care what anybody else says. That's what we should be doing. It's just really, really frustrating. Markets really don't care about 75 basis points. No. Again, NJ, I think what it really is it was optimism because the Fed's super aggressive and they're going to be take this under control. However, I believe that it's the opposite. I think it's the Fed basically panicking, saying we are in deep doo-doo here. We got some problems. So let me look at some economic data here so we can run through some of it. I mean, if you look at what, okay, I'll ask you guys. Do me a favor, type into chat why we are in this position. Why are we in this economic position as a country, right? Why are the markets tanking? Why do we have super high inflation? Why is that? And I'm just curious, type into chat what you think. It'll be curious. So while you guys type into chat what you think caused all of this, I will run through the economic announcements that happened today because I think it's pretty interesting. There's one like complete shock to me. I will literally just dumbfounded that I saw this rate increase today. So yesterday, you might remember we talked about the double top pattern forming on the Swiss franc. Well, notice what the Swiss National Bank did. They were in negative 75 basis points, and they were supposed to stay there. They raised 50 basis points, so only negative 25. And all of a sudden, look what happened to the Swiss franc today. There was no expectation that was going to happen, and all of a sudden just absolutely crushed to the downside today. Swiss franc taking off because now it's more appealing for people to hold Swiss francs. All right, here we see. Let me read here. Joe took credit for market highs. He should therefore take credit for market. Well, you know, I think it's too tough to blame any one administration. This is the summation of all of it. Let's see. Too much free money for too long. Yep. Had too much free money. I'm still blaming COVID and Evergrande. Thanks, Alan. Money printing. Yep, Richard, the Fed didn't do their job. Well, here's the thing, Chase. In their mind, the Fed did do their job, right? Because their job was to get us back to full employment. So what do? You make sure that there's plenty of jobs and expansion to do that. What it didn't do is create stability of the dollar, right? And unfortunately, that's their dual mandate. Let's see. Matt says, too much free money, COVID, because the Fed has to make the rich rich. There you go. Too much money in circulation, central banks. You know, what I noticed here is nobody here said an administration. Nobody here said the Democrats or the Republicans, right? And that's exactly right. This was not a government thing. To me, this is the Fed. This entire situation is the Federal Reserve creating one action, which in any textbook of economics anywhere in the world, pick up any language, any country, and go to get an economics degree, it will tell you if you cause a significant increase in the money supply, it leads to inflation. Yet all of a sudden, all we did was just keep printing and printing and printing. I do not know why nobody at the FOMC press conferences for the past 3 meetings, because I watch every minute of the press conference, no one has said, Jerome Powell, can you please help me explain why everyone's pointing the finger at government? Isn't the cause for all of the inflation the Fed's doing, your actions in the Fed? You created this monster by printing too much money. No one's asked that question. And maybe it's because they'll never be invited back to the press conferences for calling them out on that one. But this whole issue has been because of money printing. Now, you could add a sprinkling of government actions with, your TARP and all these different relief aids and sending out $1,200 checks to people. That just added fuel to the fire. That didn't really help any. But I really don't believe this was a government thing at all. This is a Federal Reserve thing, which is why I'm in the camp of abolish the Fed. Let's a little bit more free market. Anyway, I thought that was interesting to look at the economic data today where you had 3 bank announcements. Here you have SNB raising 50 basis points, surprising everybody out there, and that's reflected in their price chart. You had the British pound, which I actually thought might have raised 50 basis points. They only raised 25 basis points, which was interesting. And everybody here voting to raise. So there was no dissension there. We actually had some dissension in the U.S. One member said, no, we should only raise 50 basis points instead of 75. But notice what else is happening here for the U.S. The Philly Fed Manufacturing Index, right? This is basically the pulse of manufacturing in the Philly area went negative today. And that's basically saying they're all pessimistic, right? And the further this gets away from zero, further it gets below zero, the worse it gets for that economy and that market environment. You also had unemployment claims were higher than expectations. Building permits significantly lower than expectations. Same with housing starts. So this all, I think, is part of the reason we saw this market sell off is, we have the Fed being aggressive and raising 75 basis points, but the data is the data, right? Raising 75 today doesn't save you tomorrow. It may save you 6 months, a year, 2 years down the road. And by the way, you guys, we talked about this maybe we talked about yesterday's show. Let me know if we did or not. But, we call it roughly 2%. 1.75% on the Fed funds rate. And they're expecting 3.4 by the end of the year, which means rates are going to double by the end of the year. That's the consensus. And I mean, if you look at what happened with the 10-year, here's the 10-year. This is what's happened in a year. We've gone from about 1.4%. Actually, we started raising, go 1.4%. And now we hit 3.5, my target, and drifting back down. My guess is it'll probably come back close to that 3%, probably 3.2%, and then continue to rally up. But if we double the Fed funds rate again, that means you're looking at the 10-year bond going to be up to 5%, which means that your 30-year fixed rate mortgage is where? 8%. I mean, we're looking at 6% mortgages right now. It's kind of crazy. I agree. And Big Eb, that's exactly what I was I'm not going to use that hope word. That's exactly what I was anticipating happening. I anticipated a 3, maybe 4-day rally. I can come back in and load the boat with some puts, but unfortunately, I really wanted today's down move with a big put position. You just know it's coming. This was a fairly predictable event. I just didn't think it would happen this quickly. I thought it'd be another couple days out, but oh well. Trump said it's clear at the early COVID days, Dow hits 30,000, and yeah. But everybody says something, Gallo. I don't listen to what any of those guys, especially Trump, was saying about that. Mario, what happens if you long puts on a stock and the company goes bust? I mean, that's a fairly complicated question, Mario. In theory, if you bought puts, which basically says you think things are going to be going down, you ultimately are going to pick a strike price, right? So you have to pick a strike price for your puts. You're not going to pick 0. Let's forget about the option side and just think about, let's say you shorted a company, right? So in shorting, you already sold the stock, you have to buy it back. If a company goes bankrupt and the shares no longer exist, do you ever really have to buy back? I guess you wouldn't have to ultimately buy back. So that creates a weird conundrum. Is there a taxable event? I don't know. In theory, I don't think that the person that you borrowed those shares from would let you ride it all the way to 0 into bankruptcy. As far as how it would work with options, again, you have a strike price that you're buying your puts at. So, let's say I've got, let's say I have XLF financials at $30 and I buy puts at 20. Well, if it goes to 0, I'm still get it at 20. So I don't think the options make too big of a deal in there. Why not sell puts and ride the wave down? That's what I did. So, Les, I actually sold puts, and I sold puts on the QQQ. So let me just bring that up. So 269 is my strike, which we hit today. And so if we close below that, then I will have been wrong, which is totally fine. I'm okay to be wrong. But I sold those puts on Monday right here, which I think that's Monday. Yeah, this is Monday. I sold the puts on Monday. It was, when we were like a few percent away from 269, and it paid 1.2%. So basically, I got a 1.2% rate of return for 4 days to hold this one. Now we'll see what happens tomorrow. I don't think it's going to be a disaster tomorrow, but if I do get filled at 269, I collected like $2.90 per share. So, that means call it $3 per share. That means my actual price is 266. So if it drops below 266, I will have lost money. Yeah, Don, I got your question. I'll have that one over here in just a sec. Do you think this will bounce out again or blow through the 152.22? You talking about the Qs, Ron? No, not the Qs at 152. You're talking Pepsi. Okay, let me bring up Pepsi here in just a second. I want to get through a couple questions because I have yours in the slides. I built those in for everybody. All right, let's go back to my slides and materials here. I wanted to real quickly just cover this topic. I think it is an interesting one. A lot of people just don't understand how to do orders properly. To me, orders are critical in making sure that you make the trades that you want to trade. So let me do a little bit of drawing here, some artistry, and let's do that. So I'm not going to go into the 3 different types of orders that you might be familiar with, which are going to be limit, zone, and confirmation entry. But let's say you've got a demand zone planned out. So you get price moving up, got there, and it does this, and now it's coming back down. So you've mapped this out, and you said, I've got a demand zone here. Sorry, my lines are not straight. There's your demand zone. We'll just call it DZ. All right, and what you're saying, let me make sure I got the gentleman's question correct. This was for Joe. What Joe's saying is, I want to make sure price comes down here into the zone, gets all the way down in here, and then I want to have it execute as soon as it crosses and leaves this zone, right, and gets out of that zone. How do I do that? It's actually rather simple. There we go. It's actually rather simple. It all boils down to the order type. So what you're going to need to do is do a stop limit. Or stop. You have to use a conditional order, which is going to be, see, Rob, you have to use a stop order. That's your condition. And let's say that this the upper part of this line is $20. I'm just making an easy number for us. It's $20. All right, and you're saying, well, if price is down here, and the key is it has to already be in the zone. You can't really do a conditional order. You couldn't place this order when it's up here, headed down towards the zone. It wouldn't work. There really isn't a functionality for that. It has to be down below that level that you want in that zone. And then what you would do is you would say, once it's in the zone, you would go, you would just stop order would be at whatever your execution price is. So let's say you wanted to do it 1 penny above 20. Once it goes above that line, so you say, okay, $20.01 is my stop price. That means it's going to trigger an order. Now you could use a stop market, which is going to give you whatever price. We don't know. It's just going to immediately start to buy right after it hits 20.01. So you could get 20.01. You could really get any price. You just don't know. It depends how liquid the security is. Or you could use a limit. Now, with a limit, you're obviously specifying a price. And the danger here is if you put a limit price of, let's say, 20.01, if it breaks through this level and moves just quick enough and there's nobody left to sell you at 20.01, you're not going to get filled and you're going to miss the whole trade. So what I recommend is you stay with securities that are liquid, meaning there's enough volume there that you're not going to get slipped, 10, 20, 15 cents in a second. So find something that's rather liquid. Again, that's going to be most of the major ETFs, your S&P, NASDAQ, Russell, Dow. Those ETFs have significant volume. Or you could use, XLF or XLE, XLV. Those generally have good volume too. And then I would, in that situation, if I knew I had good volume, I would use a stop order as my conditions, as if it gets above or below, whatever the direction you're going, and I would use a stop market. I know a lot of you are going, oh my God, stop market? Well, look, there's another way you could do this. Instead of doing, your limit price of 30.01 and risk getting missed on that, this drawing tool thing. Instead of doing that, you could go up here and say, okay, well, how much slippage am I willing to give myself? What do you do about 20.08? So now you've given yourself 7 cents worth of slippage between your trigger price and where you're at now. Correct. Larry says a market order will only work during regular trading hours. Stop limit will work for, yep, exactly. Great point. Yes. So if this is during regular market hours, market orders are the way to go, in my opinion, as long as it's liquid enough. If it's after hours, your market order will not work in after-hours session. That's very important to know. I've had it before. I used to take advantage of people that use market orders. I would like to say it's because of me, but I'm sure it's just people like me, that they have this rule of no market, especially in the equity markets. What happens is, the bid and the ask is very tight. And then as soon as the market closes, those bid and ask spreads get super wide. So let's say, for example, the spread is 5 cents, right? And the market's open. Then all of a sudden the market closes and the spread becomes $1 or more. So I would sit on the bid side with an offer to buy and an offer to sell way out of the money, and some sucker would hit a market buy or a market sell, and I'd get filled at a huge discount. It was awesome. It was gravy train once I figured that out, and now they've taken that away from me. So you get to keep your premium after the option gets exercised at $269. Yes. So the premium is mine no matter what, right? I sold that option. That premium is mine. If the option expires in the money, so remember I sold the 269s. So tomorrow, if QQQ closes at 269 and 1 penny, then let's see what I sold. I sold a put. Then no big deal. I just keep the premium. If it closes at 269 or lower, then I'm going to be long QQQ. That's it. Simple. All right, let me go back to the questions here. And so I kind of think I kind of explained this one for Lisa. She says, I'm so confused by this market. What the heck is going on? There isn't any linear explanation to that. What you have is a hodgepodge of so many different events. I could spend 4 hours just running through, not even explaining them all, just running through the different variables that are impacting this market. So, Lisa, I can't say that this is the one piece that's doing this. Well, this piece does this piece does this, and that impacts this one. It's this complex flow chart, if you will. And it's funny because I've actually tried to draw it in the past where you mark out how this impacts this. I just gave up because it's way too completed. And you will look to sell QQQ as soon as possible. Yeah, Margaret, I will. Normally, in that situation, I like holding the securities and selling calls against them. So you can get some pretty good. So what I could do is I could say I would go out. Let's say Monday comes around, Tuesday, and I now open up my account and I have QQQ shares, right? The puts have been exercised. I am now long QQQ, the actual ETF. And let's say that's at 268. So what I would do is I would sell an at-the-money call. If I thought markets are going to drift down, I'd sell an at-the-money call, 268, and do it for probably a week. But I can collect a lot of premium for at-the-money. And if it starts to drop, I'll be collecting premium that entire time. I'll keep doing that weekly and weekly and weekly. Normally, what I like to do is go out there and look at 30 days. But I don't want to be on the hook for 30-day options like that. I think, especially if I'm going against the grain. If I'm long QQQ, that's going against the grain, right? My belief is we're going to see these markets go a lot lower. So I'll probably just dump it if I do get it on Friday. No big deal. I'm not that worried about it. I don't think I'll take a loss on it, but I could. It could happen. All right, so here's for Ron. PepsiCo, PEP, has a great-looking M on the daily chart. It hit and bounced at 152. Let's go PEP. So bear with me as I'm going to try to draw these lines on the chart as I read them, so there'll be some hiccups in my speech. But it bounced at 152.22, which I am going to put a line right there. Yep, okay, got it. And hit and bounced. 152 on 310, hit and bounced on 152 on that, and falling right into that again. Do you think that this will bounce out of it again or blow through it? All right, so let's look at that price chart. So let's see, you had 310 and 10 7 2021. Just want to make sure I get your exact dates because I don't think that this counts anymore. So if you notice what happened here on your PepsiCo on the daily chart, I have a whole bunch, Margaret. I use a bunch of different people. Wherever I have a trading account, I generally have an option. So I've got them at I had options at TradeStation. I get Schwab, E-Trade, Ameritrade. I generally use the big retail stuff. I know it sounds silly, and you're like, why don't you use Thinkorswim? I have Thinkorswim through Ameritrade. I just haven't used it. I probably should. So if you look at what this is, what it's showing right now, obviously here's that 150. Let's go 152. 152.22 is the number that Ron's pointing out. Okay. I'm kind of confused here. Great looking M on the daily chart. It bounced on at 152.22. I don't see that. I don't see it bouncing at 152. I think the number might be wrong there, Ron. You should be able to see my screen. Yeah, you got it. So what I'd be looking at is I'd be looking higher up. I think it's more 153.27. You see that it bounced aggressively on March 10th. And as we come back down to that, the question is this going to hold? I don't know. Pepsi is one of those staples. Oh, great. Pepsi chart looks different on Thinkorswim. That's really interesting. I'm curious. Ron, do me a favor. Take. It's not going to work for today, but take a screenshot of it and just email me that one. You can go to my email, TraderMerlin@gmail.com is where you can email me. I'm just curious to see what yours looks like and see how different it is. It shouldn't be different, right? It should be absolutely the same. Price is price. So something definitely weird there with Pepsi's. But anyway, if you look at what's going on with Pepsi, I guess the kind of similar question would be, are we going to see this thing bounce right here? And maybe yours is dividend adjusted. That's probably what it is, because you see they've paid dividends between now and then. You got this dividend on December 2nd, a dividend on March 4th. because they pay out that dividend, that might have an adjustment thing, and it looks like it's coming back to the same value. That would be my guess is what's happening there. But do we think about buying Pepsi at 153 and a quarter? Well, I mean, you're getting there. Would I call this a fresh, demand zone? Not really, because of what happened back here in September of 2021. So, yeah, all in all, I don't have a lot of confidence in it, although my gut tells me Pepsi's going to do fine over time. It's just a question of, do we see more of a deeper pullback here? Here's the monthly on it, just to put it into perspective. Pepsi's looking great. What about Coca-Cola? I haven't looked at Coke in a while. Yeah, similar picture for both these guys. Coke just looking phenomenal. Oh, by the way, you guys, I just always love to do this just because it just cracks me up that people follow them. But just so you guys know, right up here at the top, this day right here on April 25th, Jim Cramer said to buy Coca-Cola at $67.18. Want to get away? What brokerage has the lowest fees? For what? For options? I'm going to probably say Thinkorswim. I've never done a comparison of the options fees. I pay $1 or so here. I'm fine with that. Usually they're fairly cheap, so I don't usually pay too much attention to that one. Let's see. What did Les ask? Good. Is more extended in view. Hood is going how low? Boy, remember, Margaret, we talked about Hood a little bit, right? We said this is going to be a prime candidate for a takeover. Now, I think what's causing Hood to get hammered again is the recent kind of plan from Gensler to go after payment for order flow. Personally, I think something's going to happen in that book. I think something's going to happen. Interactive Brokers is really cheap, but the platform is not that intuitive. It's really kind of a clunky platform, in my opinion. You would have known to sell that Cramer call. I know. I used to actually trade Cramer a lot, but honestly, I don't even want to give him the satisfaction for him to know that I'm watching him. I don't know. It's not for me. But you notice what's going on the Robinhood. Like, how low is it going to go? I don't know. I mean, does it go to zero? I don't think so. I think that there's just too many assets there, and the assets are the assets under management as well as the customer base. So I think that there's some intrinsic value there. One thing that a lot of people like to look from a fundamental perspective is the book value. Let's go to finance, and real quickly, just going to bring up Hood to see what their book value is. Well, that's usually the case, Tom. Usually most companies don't have as much cash as their market cap. Let's see. Let's go to Hood. All right, let's go into what we're looking for, a book value. So I think I can go here to statistics. And let's see where the book value is on this one. And basically the book value is what's the value of all their assets. So book value is $8.20 per share. So in theory, this does not mean run out there and buy it, but in theory, this is trading at a pretty decent discount right now. It's $6.85. So if they were to sell all of their assets, they should collect, where did I have it? Be worth $8.20. Okay, interesting. I didn't think that was going to be the case. I actually thought it would be their book value would be like 3 or something. But anyway, where was the total cash? $16.66 billion. Yeah, that's great. 10.66 billion, and the market capitalization. That's kind of a weird sign, right? They have almost twice as much cash on hand as their market cap. That is weird. Normally the cash on hand is nowhere near a market cap. In this case, it's double. That actually should be of interest to people because that might mean they're looking for acquisitions. And when you have that kind of cash, they could make a buyout of someone. But $10 billion, they wouldn't use all of that. They'd use an equity play. But how low does it go? That was the ultimate question for Margaret. I don't know. To me, I just feel like it's going to keep on going down. And remember, what was my rule? It needs to make a higher high. And it has not made a higher high. The only time it's made one was right back here on March 29th when it just broke above, came to a supply zone, and then drifted back down again. So cash per hand is what, 12? Yeah, I think that's what that number just showed. Let me go back to, you mean cash per share. Let me go back to statistics. Man, where do we have cash per hand? Total cash per share is $12.23. Wow. Which is 2 to 1. Pretty much, that's the whole thing. Couldn't drink anything. I wish I had a nice cocktail in my hand. Tomorrow, I definitely will. And I'll try to start the show on time tomorrow. That was kind of funny. All right, Ron, I'd have to see your chart there to make an assessment of it, but that's what I got for you on that chart. Fun fact, who has $10 in cash per share? Yeah, it's actually 12. So the chart I looked at, their debt was higher. What about Mara? Can Mara go to zero? Yes. Yep. So when you look at these mining companies, these Bitcoin mining companies, if you're buying into any of them, I think it's really important that you look and see exactly what they're mining, right? Number one, if they're mining Bitcoin, you know that regulators are going after the consumption for Bitcoin. So if Mara is using standard power grid stuff and using standard electricity, that could be a target, right? I think regulators could come in and could potentially shut that down or put caps on it. If they're using alternative energy like wind or solar or burning off methane from fracking organizations, then they might not be subject to those new regulations that could get put in. So I would have to dig deeper into exactly what Mara is doing. How are they generating their power? What are they mining? Again, I make this one clear. If they're mining Ethereum, then they're going to take some substantial losses when they switch over to proof of stake in August. If they switch to proof of stake, they no longer need that mining equipment, and that mining equipment becomes useless. It has to be, I believe it can be reconfigured, but it's not like an easy process to mine something else. But Bitcoin, that's not going to change. So I think the concern there would be, what are they mining and how are they getting their power? All of them look like this, by the way. So you can look at, there's so many different Jeez, Merlin, tongue tangle today. So many different companies in the U.S. that are doing cryptocurrency mining, and some are actually diversifying their actions and getting into blockchain technology, not just mining. But I think it's a little bit scary. I do not own any mining companies, nor will I. I just don't see the value in them personally. But let's check out Riot Blockchain. That's a big one, yeah. Riot, man, just look where Riot was. Riot was up over $80, and now it's trading at $4. Let's see. There's a question back here. KF, which platform do you think is the best for day trading futures? So for me, it's not just a question of the platform. The platform has to have functionality that works, right? So I've mentioned this guy before, Trade Pro Futures. So I'd say it. I still use TradeStation for futures trading. It's one of the few ones I use. But this guy here, you look at Trade Pro Futures. His commissions are really low. He's got the lowest margins in the industry. I know the guy personally. And then you also have a variety of different platforms that you could use on there. So let's see, so you can see here he's got Sierra Trader, T4. He's got Active Trader, Multi Charts, Quant Tower, TT Platform, Sierra Charts. He's got all kinds of different MetaTrader, Trinity Pro. So you can pick all kinds of different platforms here to use at his shop. So I personally like that. I want to make sure that the customer service and back end is legit, and then attach whatever platform I want on top of that. And that's why he offers all the different ones. So if you go over there, tell Trey that I said hi. Trey's the guy that runs that show. Now that Bitcoin is below 21,000, does MicroStrategy have to liquidate some of its position? No. So great question. So the rumor was, and this is why you got to read between the lines. The rumor was that if MicroStrategy, MSTR, gets below 21, or Bitcoin gets below 21,000, that MicroStrategy has to liquidate. The reason they would need to liquidate is they have a $205 million loan that's collateralized with Bitcoin. So in the contract, it says, if it gets below this level of collateralization, we will liquidate you. And that price would have been 21,000. But MicroStrategy has 90,000 Bitcoin that are just sitting there doing nothing. They're not lending it, they're just holding it. So what's going to happen is, as Bitcoin drops below 21,000, MicroStrategy is going to put more as collateral to not liquidate. That's easy. The discount code, I don't know. You just tell him that I sent you and tell him to take care of you. He'll probably take care of you. He's a really good guy. So no, they're not going to get liquidated. What is going to get liquidated potentially could be something like Celsius, right? So Celsius and Three Arrows Capital, these guys have absolutely screwed up the entire crypto landscape, and now it's starting to show cracks through a lot of other companies. So, when you use these lending protocols like Celsius, you do run the risk of liquidation because you just don't know what they're doing with your assets on the back end. How are they lending out my crypto to pay me my 5% on my Bitcoin? Well, they might be selling that, buying USDC or buying UST, putting that on Anchor Protocol, getting 20%. And of course, UST implodes, you lose it all, which is what happened to Three Arrows Capital. So liquidations could certainly be a big part for some of these lending protocols, but I don't believe that MicroStrategy is in jeopardy of a margin call at all. I don't. They have so much Bitcoin, it's ridiculous. If you get a chance, can you please explain the Bitcoin dominance chart? I don't know what you're referencing, GD. I don't use a Bitcoin dominance chart. Mario says, my shorts on Bitcoin and Ethereum futures have now missed entry twice. Don't want to chase, but it seems not to be retracing enough to supply us on any comments. I don't know what to tell you there. I mean, if you're trying to short those things, just be real careful, because if you're using perpetual futures, generally, they're illiquid. So just because you might have futures over at, I don't know, FTX or KuCoin or Binance, they have futures. They may not actually be that liquid. So I've suffered that as well, where I was in a futures contract and all of a sudden, huge errors in the fill prices. I got slipped a whole bunch and it was just an absolute mess. So let me see what BTC.D does. Oh, okay. Yeah, I know what this is. So basically what you're doing is you're just looking at the entire market capitalization of all crypto, and then you're just dividing that by Bitcoin. Or dividing Bitcoin by the total market cap. Basically, how much does Bitcoin represent of the total market cap of all cryptos? So basically what this is telling you here is over the past 6 days, it's gone from over 48% to 45%, meaning that Bitcoin's dominance in the entire ecosystem is dropping a little bit. And that could very well be because something else has surged up, right? So maybe you're seeing inflows into USDC surge, and that's starting to take away some market share. If we look at the companies in that space right now, let's go to, here's CoinMarketCap. So here you have some of these big names in here. You've got BNB, you've got Binance USD, Cardano. While they're all down significantly, notice over the past few days, Bitcoin down 31%, but Binance is only down 25%. What that means is Binance has not lost as much market cap, therefore it's taking away some of Bitcoin's dominance. So anything technically in the last 7 days that's down more, down less than 31% is taking away from Bitcoin's market capitalization and dominance. And you can see here, Cardano only down 23%. So Cardano, Ripple, Solana, Polkadot have all been taking away some of that market dominance by Bitcoin. So there you go. That's what that explains. So some of the cryptos doing correct. Yep. And it's not just some. There's many. And again, the easy metric here, since we looked at this price chart here on TradingView, 1, 2, 3, 4, 5. So this is really the last 5 days, but you notice the CoinDesk has as of the past 7. So I was just looking at the biggest, how much has Bitcoin declined in the past 7 days? 31.17%. So anything that's fallen less than that is eating away at Bitcoin's dominance. And you see a lot of them in here that are doing way better. Oh my gosh, Shiba Inu. It is. Look, Shiba Inu is only down 22%, which it's eating away at the dominance. Damn you, Big Ab. All right, let me see what else I got. I see, even though they're all down, just down less. Correct. It's relative strength, essentially. And this, Bitcoin is roughly 45% of the entire ecosystem. So, it's viewed as the bellwether, the big dog. All right, let me just show you what's happening tomorrow. I'm going to wrap things up here. Here's the calendar for tomorrow, which I will be having a glass of whiskey. It's been a great week. Hopefully it'll be a celebratory day as I watch the Golden State Warriors dismantle the Celtics in Boston, because I just don't want to see a Game 7. The Celtics are too damn good, but it's been a great series so far. Anyway, economic calendar for tomorrow, as you can see at the top, you have CPI numbers coming out for Europe. They're expecting things to stay exactly where they're at, to which I cry, bull pucky. My guess is you're going to see inflation rise over there because they have not raised their rates at all. You go down a little bit further there, you can see for Canada, you also have some economic data come out, RMPI and IPPI. You have Jerome Powell speaking tomorrow. And then for the U.S., 3 basic announcements: capacity utilization rate, industrial production, which is expected to decline relatively significantly, and CB leading index. That is pretty much everything that's going to be happening out there in tomorrow's session. I'm cheering for a relatively flat day. Obviously, I would love a 10% up day because I want to come back next week and just load the boat with shorts, but I'm just waiting. All right, last one before I wrap up here because I got the economic data since Alex sent that one in. Alex, you might be new, so hit that subscribe button, my friend. I bought yearly CNBC Pro membership for $350 the next morning. Jim Cramer watching list to buy AE, American Eagle Outfitters, so I bought 500 shares. Oh, yeah. It's not that it's a scam. He's a shill. He is a paid puppet to push securities or to talk about securities that his friends and cronies want him to talk about. I mean, think about it. If I was in, remember Jim Cramer worked for Goldman Sachs. What could possibly go wrong? He's got friends all over the place. So let's say Jim Cramer and I are buddies, right? I worked with him at Goldman Sachs, and I still work at Goldman Sachs, and I call him up and be like, hey, what's up, Jim? It's Merlin. Hey, yeah, no, I'm doing great. Listen, I need you to talk about American Eagle Outfitters. Yeah. No, we're trying to unload a big portfolio position. Yeah. No, our average price is right around 25. Uh-huh. Okay. Yeah, no, if you could pump that tomorrow's show, that'd be great. We'll issue a press release telling everybody they should buy American Eagle Outfitters. Yeah. Okay, great. What sort of things you can talk about? Because we want to make sure that that's in our script that we hit to the PR people. Oh, okay, you're going to say that and that? Great, we'll do that. Okay, cool. Excellent. So that's going to be on tomorrow's show. Can you do me a favor? Yeah? Just go booyah right at the end of it when you pump American Eagle Outfitters. All right, awesome, Jim. Hey, thanks. Hey, and if you need to use my house in the Hamptons, me and the buddies are going to go fishing, going to go some shark fishing off of Florida too. You're welcome to come join us anytime. Thanks, buddy. I appreciate it. Boom. Do you think that crap happens? Yes. Absolutely. Absolutely. So Jim Cramer has a charitable trust, which I don't know if you can see the results of his charitable trust. But boy, I'll tell you what, if you're a friend of Jim Cramer's, you could front run this stuff all day long. All day long. So, I think you just really have to be careful when you read that information. So I'm sorry, Alex, I'm not trying to make fun of you at all. I'm just basically saying you got to be careful. Cancel that membership. You don't need it. You really don't need that membership. What you need to do is make your own decisions. Look at a price chart. I haven't looked at American Eagle in a while. Here's AEO, right? AEO, American Eagle Outfitters. Oh, American Eagle. Everybody on the show right now knows exactly what I would say right here. I would not say to buy American Eagle Outfitters right now. Why? Look at it. It's on a downtrend. Lower highs, lower lows. You stay out of this. If anything, you're going to go short. I mean, look at this thing. It has not been moving up since January or June of 2021. So the fact that someone told you to buy at 25, you have to look at this and go, okay, maybe I'll buy. Right? Maybe I'll buy, but as Margaret says, you got to have a stop loss in place because this thing is just down periscope. It's down more than 50%. Honestly, the SEC should be investigating Jim Cramer. I really should. You look at some of his calls. I mean, my favorite still is Netflix. I love this one. Netflix. That's where Jim Cramer issued a buy. He tweeted out, buy Netflix. That's it. Actually, it said Netflix buy. That was his tweet on January 3rd at $597. It's now at $173. Don't listen to other people. Even me. Don't listen to me. But you can take the information and make your own informed decisions. That's really what trading is all about. Never buy because somebody tells you to buy. Do your own research. Do your own homework. Don't subscribe to a newsletter that tells you what to buy or any of that crap. Make your own decisions. All right. I gotta run. Exactly. Building a base. Wait for a higher high on American Eagle. Great, I was trying to get out of here. AEO, right? Just wait for it to start to make some highs. At a minimum, it's got to start moving up. And in this case, it has not moved up. So stay short. Stay out of it. I hope you dumped that one, Alex. I hope you dumped that one. It does not look good. And the sad reality is at some point, it's going to turn. At some point, it will go up. It's just, why fight that trend, right? Stay short until it tells you it's going to go back up and do what it did back here in 2020. All right, everybody, that's it for me. Hope you enjoyed today's show. Sorry for the late start. I totally just spaced out and was over here talking to my screen and didn't hit record, or didn't hit live stream. But I got the stream going now. I will record it tomorrow. I might even have a double shot of whiskey tomorrow. We will ultimately see what happens on that QQQ just for fun, so you guys can throw virtual eggs at me through the screen. That said, I hope you have a fantastic remainder of your day. Email me if you have any questions at TraderMerlin@gmail.com, or put them down below the YouTube video so I can get them all ready for tomorrow's show. Happy Friday, everybody. See you tomorrow.